What's going on, guys, and welcome back to another very exciting video. In this video, we're going to be talking about Meta, and Meta is one of the largest positions in my portfolio. And what I want to do in this video is I want to go over the earnings that they announced today because they came out with some amazing numbers. So what we are going to do is we are going to take a look at all those numbers. I'm going to give my opinion on them. Then we're going to take a look at valuations around Meta, where they're currently sitting and where they could be headed if Meta continues to beat on EPS numbers through the end of this year. So I hope you enjoyed the video. If you do, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. Even with them beating their numbers huge today, Meta was down 4.17% on the day. And after hours, they have dropped another 3.45%. What's very interesting is I think the market is actually digesting a lot of the news from the earnings we have already seen and anticipating that the Fed may have to step in and raise interest rates. We have seen a lot of positive numbers out of a lot of businesses across the board, and I think this is actually spooking investors because they're anticipating that the economy is actually better than people are thinking, and this may force the Fed's hand to continue to increase interest rates. I could have gone through and basically highlighted this whole earnings report green because of how many positive things that Meta announced. We saw their revenue grow 23% year over year from $27.7 billion all the way up to $34.1 billion. They were also able to decrease their costs and expenses by 7% year over year and increase their income from operations by 143% all the way up to $13.7 billion. And in terms of earnings per share, they saw 168% growth year over year from $1.64 all the way up to $4.39. And Meta's EPS number of $4.39 beat analyst expectations of $3.42 by almost 30%. On top of all of these positives, they also spent the quarter buying back their own shares. They repurchased around $3.7 billion of their Class A common shares in the third quarter of 2023. One big concern that I have had with Meta, as well as a lot of other investors, has been around their headcount. Meta has increased their headcount in a massive way over the last 5 years, and what we have seen this last quarter is that they have decreased it by 24% year over year, all the way down to 66,000 employees. This is a very good step in the right direction for Meta on keeping their costs low and being more efficient. So for EPS and revenue, Meta had an amazing quarter. And if we look into some of the reasons why, we actually see that they have done a very good job of navigating Apple's iOS privacy settings. They've associated some of this benefit having to do with their AI technology and how well it is picking up and really pushing ads to the right audiences. And this has showed when we compare them to competitors, because if we compare them to Google only saw the revenue in terms of ad revenue increase by around 9.5% year over year, and Snapchat saw it grow by only 5% year over year. So for Meta, we are seeing that number increase a lot more rapidly and really showing a lot of potential growth into the future. And there are a couple of key factors when we look at those revenue numbers. The first being how much are they able to actually convert into free cash flow? And when we look at their number for the third quarter, they were able to bring in $13.64 billion of free cash flow, and compared to long-term debt of only $18.38 billion, they could basically pay off almost all of their long-term debt with just the free cash flow from this quarter alone. The other important factor to revenue is how many people are actually using their platforms, and what we saw in the third quarter is growth across all of their apps of around 7% in terms of daily active users and 7% on monthly active users. And a lot of people have said that Facebook is dead for a long period of time, especially when we saw TikTok really taking off last year. However, in this quarter, we saw Facebook daily active users increase by 5% year over year, and monthly active users increase by 3% year over year. And when you're talking about platforms that have over 3 billion active users, oftentimes it is difficult to get any amount of growth at all. So for Facebook and their apps to really be seeing high single-digit growth numbers, that is overall a positive thing. And the other impressive number for this quarter was their EPS number. We saw them come in with $4.39 of EPS. That is on a non-GAAP basis. On a GAAP basis, we saw them come in with $4.50. And again, year over year, that is very impressive growth from $1.64. And if we look at the 9 months ending in September 30th, we actually see that they have grown their EPS year over year by over over $3 in the first 3 quarters of the year. They are up from $6.86 in the first 3 quarters of 2022 to $9.73 in the first 3 quarters of 2023. And when we start seeing EPS numbers as well as revenue numbers growing in a massive way, this can have a huge effect on valuations. And the reason for this is the effect that it has on a PE ratio. When we see earnings start going up, if price were to remain the same, the PE ratio would start to drop. The second factor is how investors look at higher growth businesses. When a business grows at a higher rate and has higher revenue growth, they tend to command higher valuations. And right now, analysts have an average EPS estimate for the fourth quarter of $4.56. If we add this on to the $9.73 that they have already achieved through the first 3 quarters of this year, we get $14.29. And this is about $1.70 higher than the average EPS estimate for 2023. And it is even 70 cents higher than the high estimate for 2023 of $13.60. And all of that is under the assumption that analysts are right about their fourth quarter for 2023 of $4.56 after being wrong by almost 30% in the third quarter. So personally, when I look at this earnings report and the amazing numbers that Meta came out with, I am actually considering buying more into this company. It is one of my largest positions, but right now the stock is down in a major way during the day as well as after hours. And this is a company that, in my opinion, should be trading at a much higher valuation than where it is trading, especially based off the revenue growth that we saw over this last quarter. So if we see Meta start falling a little bit further down, I may start being a buyer of this stock again. But keep in mind, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So with all of that said, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.